welcome to the Educator Trade Podcast with me, Chris Pollok.
And me, Z.
We're reviewing a pretty hefty week there, Z. Yeah, had a big old sandwich of data just to kind of really front load the whole rest of the summer. I kind of feel like maybe that might be it for August already. It's been an absolute mammoth week or so just gone by. Yeah, where do you want to begin? Where do you want to kick off? Let's get straight in this week.
Yeah, let's straight in. I think everyone is still thinking about Powell. When we think about economies, we think about Powell's interest rate decisions.
He's still here?
He's still here for now. Yeah. You know, he's bickering with Trump, but he's still here till May, I suppose. And he's holding out.
Yeah,
he's holding out, and with that, everything is sort of correcting in the market right now. Mind you, it's Monday. It's a change of events. Normally, we sort of review things on a Friday, but we're starting off the week reviewing what's upcoming. And I think Powell's decision, where sort of the economy is right now, with sort of Nasdaq and others hitting all-time highs, we can talk quite a bit on these topics.
Yeah, well, let's get there, right? So Powell. Well, let's have a look at just tell you the rate decisions first of all. We had a hold, another pause from the Fed last week, keeping rates at 4.5%. Interestingly, this time we had two dissenters, right? Fed's Waller and Bowman both voted this time for a cut. We don't often see dissents, so it's showing maybe the front of the boat starting to turn a little bit, even if the full middle of the hull hasn't quite made that move. And Powell came out with some interesting comments, right? He was talking about the labor market still strong, growth still strong enough. We're not too worried about it all yet. But it was the chat about September that really kicked the markets lower, right? When he was talking about the market had been maybe semi-pricing in that we'd get a rate cut in September because Trump and Powell had obviously met, as we spoke about on the last podcast, and had a little chat with one another. When Trump left the room, a day later he said, yeah, Powell, he sounds like he's close to cutting rates, I think. Well, Powell pushed back on that, shall we say, on Wednesday night and said they have made no decisions about September. So when that came in, it wasn't like they were kind of prepping us and lubing us up for a nice rate cut in September at that point, and the markets really didn't fancy that much. Another thing that came through that was kind of seen in the middle of the statement was that he was kind of asking the markets and Trump especially to be happy that they hadn't raised rates because goods inflation is still high, and he said we are looking through the inflation to keep rates where they are. So he was almost saying, give us a break, we're doing you a favor here by not putting rates up, which obviously goes against the Fed Bowman and Waller had said. But yeah, that was enough to give these asset markets a hell of a kicking on Wednesday night. If you have a look over to the S&Ps, you can see a pretty familiar pattern when it comes to Powell press conferences. Remember, we had the rate decision at 7. There was no dot plot. There was no summary of economic projections. This is true of every second Fed meeting. That makes these Fed meetings less interesting at 7. So 7:30 was where we were going to focus all our attention. And normally it's at 7:36 to 7:38. We were talking about this on the live Zoom. If you want to kind of join on with us live during these, yeah, feel free to join us. It's normally a pretty wild ride on a Fed night. And right on cue, what was the high of the day? 7:36. We called this at the start of the call. 7:36 to 38 is where you want to watch the action. And my God, was there action?
Oh boy.
Yeah, what did you make of it all?
Thing is, like, when he was speaking, I had the charts open, and I think this was the message here. I think that moved the market, and it was, we have made no decision about September.
Yeah, not what Trump had insinuated to markets earlier that week.
The moment he said that, that's when we started to just fall short, and we were sort of short in the market for the next sort of few days. I think the markets are correcting themselves a little bit now, but I still feel, I think I spoke to you before the podcast, could we be seeing big short for the next few months?
Yeah, well, let's take a look at the big picture in a minute. What is interesting about markets at this time of year is it's not just, well, there was so much last week, right? We had this big washout on all this news into the lows, and then we had earnings. It almost doesn't matter what Powell says. If Meta and Microsoft are going to jump 6% after hours, that's going to drag the S&P and Nasdaq up kicking and screaming, and that's kind of what we saw, right? I mean, it's terrible news, right? The fact that the market isn't necessarily, or Powell's not insinuating at least, that we're going to get those rate cuts as early as maybe people were forecasting, and then bang, we get big news, big positive data. I guess this is the sort of thing that maybe makes him right? If the economy is still ticking along fairly nicely, and maybe the tech is, it's all skewed towards tech in the US indices here, so it is mainly a tech index, even the S&P these days. But yeah, that big after hours move took us all the way through to the highs and beyond, and then the next day we ended up pushing even higher. So yeah, all the bad news in the world from Powell, and then bang, some good earnings can just take you all the way back there. Fascinating night.
The way I see it right now is you got the AI tech bubble, and right now everyone is building their stack on NVIDIA. So we start off with NVIDIA, then Meta sort of give positive reviews about their sort of AI solutions, and so does Google, and so does OpenAI and all the other companies. And I think that's the way it's going to work. I think we're going to have corrections, and then we're going to see pullbacks, and then we're going to see quick corrections. And I think that's what we're constantly seeing. We're seeing bad, maybe economic data, but then if it just takes one tech company like an NVIDIA to just make some good comments saying we're in demand.
Well, NVIDIA's famously late on the earnings cycle, right? So we're going to have to wait a couple more weeks to get the NVIDIA numbers through. So yeah, we'll see. Probably mid to late August, those figures. Maybe that's what the market's waiting for, but there's plenty else out there which we should probably jump to around some of the more harder data that was also pretty ugly for the markets on Friday.
Yeah, no. Let's look into the indices right now. The indices are taking my complete attention because they made all-time highs. And once things make all-time highs, we always expect a correction. So my question is, with all-time highs on S&P, on Nasdaq, where do we see the next few weeks? Or let's say this week.
Well, let's not make sure people aren't misinterpreting that. Let's never just always short all-time highs. If
Not
you
at
do
all.
that, your accounts are gone.
Sure.
Right? This market has been making all-time highs, then all-time highs, then more all-time highs for most of my trading career. So I'm not too shy about going long at all-time or near all-time highs. Having said that, though, if you look at the daily chart on the S&P, we were fairly toppy here, right? This is a pretty vertical response to that initial Trump tariff announcement, and then the U-turn, the taco trade has really kind of run through at least until the end of last week. So yeah, pretty toppy. I mean, we are off a little bit here, but what's interesting, and I think we briefly talked about this last time out, right? This kind of middle of the year, we saw this happen in around July last year. We had a big washout into August. Go back to 2023. Okay, July, yeah, there's a meaningful move, right, from 5,000 down to 4.5. They got 500 points wiped off the S&P on that particular move. 2022, a little bit late. 15th of August, we had that move to the new lows for the year. This is pretty common, right? This is typically a low vol region. The VIX is pinned fairly low at the moment, and if that wants to unpin and start to move higher, then yeah, there's plenty downside in this available. Probably though, just to buy it.
Yeah, to buy. This week we have a few sort of important data, sort of structures coming out, right? So we have.
Do Friday first, because this was the other big thing last week. I know we had our work Christmas party, didn't we, on Friday?
Yes.
Summer party on Friday. So yeah, a few of us were out and about after this one. But this was the non-farm payroll, right? Famously the most important number in finance, and yeah, not a great figure. 106,000. I mean, that's a low forecast for one. If you look at the forecasts recently, you know, that's the lowest forecast we've seen in a hell of a while, right?
For a while.
Another one back in November of last year, but yeah, this is a low number forecast, and it disappointed. But worse than that, look at this revision. We moved down to 14,000 jobs for the previous month from what? From 147.
Wow.
This is horrible. And if you want to look at the chart on this, you have to take COVID out of the way here, because otherwise you have no clue. But there's a clear decline in the jobs market, and I know Powell's saying that the jobs market remains robust. It probably is fairly robust on an unemployment rate basis, because there's just no immigration, right? So maybe this number isn't going to change too much, even if these non-farm payroll figures start printing around, you know, averaging maybe 50,000. I heard Macro Alfonso Pacatiello talking about the fact that new labor supply is probably about 50,000 a month now. There's no immigration.
Wow.
So maybe we'll see them like quite happy with NFPs at these low figures. But yeah, base this at any point, you know, post-COVID, and have to scroll past COVID to try and show you it again. You know, averaging 50K was not on the agenda, right? These figures, well, you just don't see them. So yeah, if we're going to start sitting down here for a while, this could get pretty nasty, and maybe that's led to the change in tact from last week on. Yeah, this time last week we were expecting what, a 59% chance of a rate cut for September. Now that's shifted all the way up to an 84% chance. So regardless of what Powell is saying, the markets are saying something else. We are pretty much pricing in now that the rates will indeed be cut in September. The beauty of this for Powell is that he gets another non-farm payroll figure before that, because of the way we're in the summer. This is a slightly longer stretch, a 7-week gap rather than the normal 6, and that means he gets 2 non-farm payroll figures. So we'll have another print to look at. And too late, Powell, as Trump calls him, may well be too late. But yeah, it may well happen.
Yeah. On Thursday, I was with a bunch of crypto buddies, some influencers out there.
Right.
And we were on the call. We were watching Powell, and we wanted him to give some sort of indication that there will be no lower interest rates, because that's what crypto is waiting for. Lower interest rates, people take high risk.
Yeah.
And so we were expecting a little indication of some kind, and we didn't get that. So now we sort of go from our longs and sort of buying sort of tokens into looking into leverage shorts.
Yeah.
And we're still looking for those outcomes. I think there's no hint yet, but overall, yeah, the vote does show 84%. So hopefully that's where we take it.
Yeah, I mean, I love looking back on the long term when we look at this. Cause if we go back to last week, we look at the Fed funds rate. Historically, where are we? I'm looking at the BOJ here. That was another interesting one. But yeah, if we have a look at the chart on this, right, we see this kind of plateau here at around 5.5. Well, if you go back in time to when I started trading, we were up around here. This was literally my first month in the job was June '06. We got to around the same levels, and it was when they started cutting rates that the markets actually collapsed. Right, this too late thing is very common with central bankers. They have to use data. They can't use, putting the finger in the air. They've got to see numbers to see that something's going wrong. And if numbers are coming in weaker and weaker and weaker, often the catalysts for that are very well entrenched in the market. So maybe, we did have a little cutting phase here before pausing again. Who knows? If he starts rolling it down here, Powell wants to cut rates. He must see something that's really ugly in the markets. And I'm not necessarily expecting great financial crisis levels of washout here. But hell, I mean, we're up high here, right? So there is a potential that this second half of the year maybe isn't quite as pretty as Trump was hoping for.
Yeah, no, I think there's still a lot to happen in the next sort of few weeks and months. September is a big month with the decisions. In the meantime, for traders, I'd say, how would you anticipate?
Right. So my plan this month is to go on holiday.
Okay.
I'm away from the end of this week, and I'm fairly happy to be away. I'm going to miss some earnings, but this is a low volume period. Let's have to go back and have a look at the daily ES to give us a little view on this. If I can chuck up some volume stuff on here, you'll see here that typically, don't want the RSI on this. We kind of look back to the summers, look at this through August. By the time you get to the second, third week of August, the volumes often just drop off a cliff. And they only really return in early September. It should be relatively early this September. Labor Day is the 1st of September, which is as early as it can be. So that at least gives us a pretty quick return. But we saw this again in 2023. Going back to the August, it's fairly light through here. Maybe not quite as dramatically. Seeing it in 2022. Again, this August lull really is pervasive until you get out the back end of it. So I'm probably not having to do too much is my plan. I do feel like there's risk out there. I feel like you want to hear from these Fed members this week to see what their take is, especially post non-farm payroll data. So I think the Fed members are going to be really in play. But when the rates are a little bit more in the balance, okay, this was posting below 80 when I looked at it this morning, right? So it's less in the balance than it was. But when rate decisions are in the balance, every economic data print matters. So I think data is going to be important to trade this summer. The beauty about trading around data is you don't need to be at your desk 12 hours a day. And that's quite a nice thing when you're trading in the summer, right? You don't need to be at your desk all day long. You can get out and play those golf or get on the surfboard again for you.
Back to Cornwall.
So I think trading news, trading data releases and around them in the aftermath of them, I think that's probably the approach. And maybe not trading too much would be the other one. So Fed members, US data, I think that's where you're going to get your real high win rates or relatively high win rates out from this market this year or this summer.
I think like this is equivalent to like sort of Premier League preseason, right? So we're all seeing all the clubs sort of get anticipating for like the start of the sort of preseason, and now we're sort of the Premier League starts in September or August, end of the month. So the economy works the same way, where we have everyone on holiday. And then everyone gets back to work everyone goes back to school as well around end of August, September, October time. So I think that's the way I'm seeing it.
Yeah, I think it's the best time of the year. That September through till mid-December, I find that the easiest time to trade. So I'm looking forward to it, and getting myself nice and relaxed, or as relaxed as you can be with 2 kids on holiday as we roll into September. So I think that's my play. Don't really want to be forcing people to trade too much during this time. I think it's maybe a bad idea. We've got a few people who are finishing their level 5 diplomas with us in the next couple of weeks. My advice to them is maybe this is your back testing window, and then really crack it properly in September. The markets are going to be very different, I think, as we move through August, late August, than they will be by the time you get to kind of week 2 of September. It's going to be a completely different game with the participants all back. So trade easy out there, I'd say.
I would say like sort of new folks coming on the diploma, they should be looking into data-driven sort of stances. So when we look into non-farm, when we look into these things, there's a reason we look into these things, because there's huge impacts when these things do happen. I think most people, when they hear the word data, they think about technical analysis. I'm talking something very different here.
Real news is going to move markets. And any other things that might come out there. I mean, Trump's impact on things like the copper market last week. Like you just got to be careful of him, as we've said all year. But yeah, I think just generally being careful with the number of trades from now till September, I think will stand you in good stead for the remainder of the year. Less is more, and for me, nothing from the end of this week is more.
Awesome. So what I've done is every single Monday I'm going to sort of take out the main events of the week, and then I'm going to create some squiggly lines.
Okay.
And I think that's just something we'll do on Mondays, where I think so we have ICE and PMI coming up.
Yeah, the services
Tuesday.
one. Yeah, we already had the manufacturing, but services is out this week. Not a huge one. Yeah, but that's due out on, is it tomorrow at 3? I think so. Yeah, we're expecting that number. It's probably the biggest number of the week. That and the UK rate decision. They're expected to cut rates in the UK this week on Thursday, and then unemployment claims, that weekly number. I mean, the fact that that's on the list shows you it's not the biggest week of data. We had that last week.
Yeah.
You can't just keep throwing data out, right? We've got it all pretty much. And then CPI's next week on Tuesday. But yeah, apart from that, yeah, I'm going to keep myself pretty chilled.
Yeah, I think you do your summer holiday. I'll go surfing.
All right.
Week.
Well, yeah, seems like a good place to end it. Hopefully there's some good advice in there to not overtrade this summer. Save your overtrading for September. I think it'll be better used then. Any parting words? Z, got any final takeaways from the summer?
Yeah, just gonna keep relaxing, enjoy, learn new ways of trading, learn data-driven approaches, and keep learning about the bond market. That's my sort of homework for the next couple of weeks, to understand the bond market more. Maybe, it's something for new traders to look into.
Yeah, I think the next 10 years, bond traders will make an absolute bucket load of money. So if you want to get into that market, there's not many veteran bond traders around these days. It wasn't a thing for 15 years, but maybe that's somewhere to look at if you're looking for a new career. All right, well, we'll sign off there. Markets are open now, so we should get to our desks. Yeah, we'll be doing this on Mondays going forward. Sadly, without me the next few. But yeah, I'll see you back on Monday in September. And in the meantime, have a lovely summer.
Thank you, guys.